help people. So let's go over the scripts and just leads again. I don't see many people getting the numbers that they deserve because their lead orders aren't where they need to be. So I'm just going to go over this real quickly just to advise you. You know, you got 20 to 30 leads. Let's set these appointments, guys. The script is very, very, very simple. You know, you got your mortgage protection lead set aside here. Here's one here. It tells me the name, address of the individual. It tells me the telephone number, what time's best to call, and it tells me the amount, $128,886,000. That's not what I'm trying to cover. So just so you're aware, when you're doing mortgage protection, you are not 1 out of 10 times are you going to cover that number whenever you're in a home, if that even. So your job is basically to cover the back end or the front end. All you're doing in mortgage protection is selling. Here's 1, 15, and 30 years. You're making sure, now 9 times out of 10, if you can draw this out to the prospect, you can show them this line. This is equity built up over the years. And I'm going to give you an equation to show them how to do that. Show them their equity in 15 years. And say, God forbid, if something happened to Mr. or Mrs. Jones at this time in life, that let's say there's $80,000 in equity built up in the home, that Mrs. Jones doesn't have enough money due to your demise, Mr. Jones. She can't afford to stay in this house, but we don't want the bank keeping the 80 grand. So what we want to do is put a policy in place that helps her sell the home. Now, a lot of you know that, a lot of you don't know that. But on the flip side, if he made it to the 25th year in the mortgage, now they have enough, God forbid, if he passes away, gets hurt, injured, car accident, cancer, cardiac arrest, stroke, things like that. Also, they get the money while they're alive, so there's living benefits that you guys should be enforcing on the individuals also. So they also pay the back end off. So if the policy's worth $25,000, what that $25,000 does is it buys them time to sell the home, get the equity out. They got to be forced. The bad news is you got to move. The good news is you walk away with 100, you know, whatever the equity is along the line. But this illustration usually works best in the house if you show them midpoint. If he's 65 here and he's 80 here, the likelihood of him dying is in this era of time. So what I point out is 9 times out of 10, nothing happens in this era of time. It's usually going to happen in this era of time. So what we want to do is show them the equity that Mrs. Jones is going to pull out or the back end. Now, here's the flip side. If this policy is on Mr. Jones and this $25,000 is to cover him, but hypothetically Mrs. Jones passes away, well, the products we use earn 7.14% interest on the cash value. So the cash value is substantial inside the product. All they have to do is Mr. Jones just pulls the cash value out if he doesn't need the policy anymore. So what I tell people is kind of like buying 2 policies in one. So if the premium's $100 a month or even $200, then I tell them, listen, I'm paying $100 a month at age 65. That's not too bad at your age, guys. So that's a pretty good way to sell this product. And I'll just review this real quickly again and later on when we go over this again. But remember, you're not selling. If somebody has a $200,000 mortgage, your job is you're not really ever trying to cover that because the number to be affordable is astronomical for them at age 50, 60, something like that. Now, at age 20, 30, 40 even, you could probably do this for 30, 50, 60 bucks a month, and they probably could be affordable for those individuals. But for people over 65, 50s, things like that, it's not. So what you want to do is take $25,000, even $50,000, and get the house sold. Selling the home is the key to your success in making money in this industry. So these products usually go for 100, 200 bucks a month, even 300. So if you're, it works very well. Now, if you're selling return of premium, term, that's okay too. You know, we got a new carrier up, and that carrier works very well in this scenario. All our carriers work well. I mean, you know, we're all basically in the industry using the same stuff, except for the one product that we have that has the high interest rates on the cash value. But other than that, all this stuff works very well inside the home, and you just need to learn how to get product knowledge. People call me every single day about products, and I keep telling them to contact the carrier. It is one of the best ways to get your knowledge is by contacting the carrier to get your wisdom from the products. You know, you really can't. If I was a car salesman and I didn't know the car I was selling, I couldn't sell you the car. So contact the carriers, get the education you need to be able to sell these products. But again, let's rewind. Let's go back to the leads. If you do not have a lead order coming in on a steady basis, you're 9 times out of 10 doomed. I mean, you cannot start a business without marketing today. If you don't use our lead systems, I don't know how you're going to be able to accomplish it besides going door to door. The leads work, guys. If you're selling final expense, what do you got to worry about if the lead is 24 hours old? So when you're contacting Mrs. Jones and you say, hey, Mrs. Jones, my name's Jason. I'm doing a follow-up call to that call you received yesterday about that final expense information, then there should be no ifs, ands, and buts whether she knows. In fact, she does know your first name because they tell her who's calling, and they know why you're calling. So that's fantastic for the final expense, being that it's, you know, anywhere from $7 to $11 per lead, and there are cheaper ones too that are B leads. We also have B leads. I mean, there's like 7 different formats of leads. So if you are not aware of all the lead programs, you need to get with your upline and contact them and get them to educate you on all the marketing that you have at your disposal. Very important to understand that. So what we have here then is the ability to sell mortgage protection and final expense. Even when you're selling final expense, it's a great place to start before you jump into mortgage protection. When you contact Mrs. Jones and you tell her, look, Mrs. Jones, I'm the rep that handles that area. You know, I'm doing that follow-up call to the call that you received just 24 hours ago about that information. Make it about information. That's it. Just deliver information. It puts them at ease. How much is it? I don't know, man. You know, we're a brokerage, and we have multiple carriers. So our job is to get you the best price. We're not coming to take any food off the table. I promise you that much. So tomorrow at 2 p.m. will work well for you, right? I'll see you tomorrow at 2. Just get around every objection you go, just go right back into the appointment setting. Very simple process to do when you're doing this business. Go right back into the appointment setting after you get right through the objection. Don't wait for an answer. Just go right back into the time and date that you're going to be setting the appointment. Now, when you sell a final expense, demographically speaking, it's a little different than mortgage protection. That's why mortgage protection is so lucrative. You're walking into the individuals who really have something special to cover, which is their home. And they have loved ones who they truly care about that they need to be able to cover, in a sense where if God forbid that Mr. Jones passes away, if he has cancer, if he has a heart attack, or if he has anything, you know, utterly close to those items, there is a book that tells you a list of things that they cover due to life benefits that Mr. Jones and Mrs. Jones are covered. So it works well. So here's what you got here. You got your offers for final expense. You got mortgage protection. You got annuities. A lot of people want to start selling this stuff, but don't have these two down pat. You can't get to this unless you get to this. And you can't get to this unless you have leads. So I know a lot of you are threatened by the financial, the first little bit of money that you have to invest into this business when you first get involved. But investing $300,000, there are people that invest $2,000 a week into their lead programs, but they funnel that money out. What is that? That's $2,000, you know, I don't know what the number is, but it's substantially how many leads you get. I mean, but what you're doing is you'll take $2,000, you'll easily pay that back. You're definitely going to pay your lead costs back. Plus you're sitting on a pile of leads. So don't ever have a fear in any way, shape, or form of investing into your leads at all, because you will reap it back. Now, with the mortgage protection, anybody trying to get into mortgage protection because of the premiums that you're able to sell, and the average premium can be $100 if you're new. If you become good at it, it starts to get to $300 to $600, and then obviously you're paid, $6,000 here. You paid $3,600 here. This is actually $7,000. Plus, you add the annuity sales into the program, and you're able to pull $10,000 here, up to $50,000 per sit. So that's per sit. That's not a month or a week. That's per sit that you're able to pull these numbers together. So these are huge, huge, huge. This is value, guys. And if you don't pull this into your strategies inside the home, you're never going to pull this stuff out. I'm telling you, I'm one of the best at getting this stuff out of people. This here, I can find the money. I can teach them how to use the money. So that's some of the things I wanted to go over with. But for the new people getting involved, I'd like to just take some time out on final expense and just say, look, let's simplify final expense. Really make it easy. I want you to build value. I want you to show them where their money's going. Show them that 9 times out of 10 that the cash value earns 3% interest. Show them that it has a death benefit also. You're bringing the value, you're showing cash value, it has a death benefit. However, again, just like I told you before on the last policy, if this is on Mr. Jones, let's say it's $15,000, and Mr. Jones never dies, Mrs. Jones dies before him. Let's say it's 10 years down the line. Now there's cash value built up into this policy. He doesn't need this product on pulling premiums out of his bank account anymore. So all he's to do is get that, he pulls the cash value out. So again, sell it as 2 policies in one. Remember this, it's important to build value. If you're not building the value that these people need, you're not going to sell this stuff, man. I'm telling you, they need big value. And guess what? You're going against other reps too. So it's very important that you build the value. You got a final expense lead. What it cost you? It cost you $11. You go in here, you sell this at 50. You made $600. That's not too bad. So, you paid 11, you made 60. Now your job's to sell 5, 6 of these a week, 10 a week. It depends on the first thing that I told you to get is this, leads. So how many of these does it take to get from this? Well, 30 to get 10 of these, which is $6,000 a week. So if you're the kind of rep that's out there minimizing your resources, you're hurting your bank account, bottom line. So make sure you're investing into your business. It's very, very important. Very important to your financial future. And this is the simplicity of selling final expense in the house. What products do you use? Well, choose the best price for them. Choose the product with the best price, the lowest price. I mean, as long as it's not a graded product or ROP, then just get the best premium for them for the highest amount. That's as simple as it is. Look, we have an app that if you type in type in the carrier that you're using and the age of the individual non-smoker or smoker, it'll pop up every carrier that you're with and tell you the premium prices, and then it'll also tell you the face amount that comes with it. So it's a very simple process, and they give you a couple older free leads to get started with too. So it's a great solution to your problems inside the home. Makes it a lot faster than going through all the paperwork that you have and things like that. So to find out the premium costs anyway. So that's it for that. Now moving into mortgage protection, which is what we focus on really. mortgage protection. If any of you have any questions about, like, anything in this industry, you got to ask me. That's the only way you're ever gonna learn, really. Is I can't always touch on. I don't know what you're thinking or what you need to know or what you're running into. So ask me. So the mortgage protection situation is a little different. The leads are a little more costly. However, we do have $3 mortgage protection leads. These are about 30 days to 90 days old. And then there's 90 to 6 months. And then it goes so on and so on. After 6 months, I think it's $1 a lead. So long story short, there's no excuse for leads. When you have a dollar lead system out there, just buy the hell out of them and dial. Look, if they don't already have this stuff in place, that's okay. That's fine. Tell Mrs. Jones you're already in the area. Wouldn't it be nice to see if I can double the amount that you're leaving behind in face amount, Mrs. Jones, and get you a lower premium also. So you never know till I bring the stuff out here. 9 times out of 10, my carriers are able to outperform all other carriers, so I might be able to get you a lower premium with a higher face amount, which means you'll be leaving more money behind. Okay? And it comes with living benefits and things like that. Explain the product. Bring value on the phone. If somebody has this already and they say, look, I already have it, you got to bring value. Now, Mrs. Jones, I can probably double the amount that you're leaving behind. 9 times out of 10, I can do that. And I always say 9 times out of 10 just in case it doesn't work out. So the premium on the flip side, I can beat the premium 9 times out of 10 too, and I can give you living benefits, which means I can get you the money while you're still alive. So you don't need to be dead, or your significant other doesn't need to be dead for you guys to enjoy the money together. God forbid that you ever need it for the worst times in your life, but it'll be there. So this mortgage protection thing is very simple too. It's again about value and finding the need. Once you find the need and build value, it's done. There's no way. 9 times out of 10, again, they don't say no because you built value, you found the need. They truly understand the need is there. They know it's there. There's no way around it. But once you have to next build the value to fill the void of the need. So it's very important that you do that in selling mortgage final expense. Annuities are more sense like, making sure that people see that their money's grown and that they still have access to it. So when you're selling an annuity, you need to make sure that they understand that it's building their cash and it's also allowing them to have access to it. Those are the 2 main things that people are concerned about. Will I have access to it? Some people ask me how much an annuity costs, and I always tell them there's no fees to it. There's nothing that can, there's no, you don't pay anything to get into an index annuity. So it's just it's either a 1035 or it's a transfer, and that way you just take the money and they put it into the product and watch it grow. Now, if you do need access to the cash, it allows you 10% access to the money yearly without penalty. And then after 7 or 9 years, you're penalty free. So it's really a fantastic product to be able to. I want you to show people the product anyway. Somebody has to mute. Somebody's got to mute out. Please. So at the end of this ride, man, you got a lot of opportunity here to make a lot of money. Mortgage protection income, just your earnings are averaging about $3,000 per sale, all the way up to $6,000 per sale, doing it my way. Now, this isn't really the detailed in-home training that I usually do. I'm just trying to show you that you got to bring value. You got to find the need. I'll show you the income that's possible. Well, this is per house. What happens when my reps or other reps out there sell? Times this by, what's this, 3 sits? It's $18,000. 3 sits, 9,000. That's 3 sits. So these numbers make sense to invest $1,000. Invest $2,000. So if you did either one of these, so what? You're at $7,000. So what? You're at $16,000. Doesn't it make sense to earn that kind of money weekly? Get all your investments. One way or the other, you're going to be investing this money, whether it's in a week or it's in a year. You're going to be investing that money. The only thing you don't believe in is your abilities, which is understandable if you're new. So you got to take it easy up front. I'm not saying come out of the gates with this at all. I am telling you eventually you got to go to this level to get the big money, or you're not going to make the bit larger sums of cash. The only way you'll be able to make the larger income is if you start to grow an organization. So if you grow an organization, you'll be able to make the kind of money that you deserve also. So get involved in building an organization also. Whatever you do, you know, when you're teaching your reps, it's very simple too. I tell people most of our people send people to the webinar here or the Facebook page, and then we're able to train them here also. So when you're doing the recruiting portion of it, that's a different story. We have to, you know, more like train you one-on-one with that and teach you how to bring the reps in and get them licensed. If they need license through the state, you know, we do that fairly cheaply. I mean, it was a hell of a lot cheaper than when I paid for it. I think it was like $300 when I did it. Now it's 25 to 60 bucks, depending on how they do it. And I know there's a lot of organizations now offering it for free, but there's no value. Everything that you guys hear that's free out there, I can get free leads, but I'm going to do a 60, 50% contract level. Why would you do that? I mean, what in right mind would make you do something like you want to lose 50% of $1,000, right? So you want to lose 500 bucks because you couldn't afford, you didn't want to pay $11 or $3 for something. Now this just shows lack in your abilities, and that's okay. I understand that maybe some of you are a little intimidated by the sale and not understanding. But you know why you don't understand it? Here's the bottom line, is if you knew the products, you would understand it. You would be better off, because just presenting this to Mr. and Mrs. Jones at the table is nothing less but coming up with a premium that fits in their budget that takes care of the need. Now, why are you there for final expense? You're usually there to take care of the burial or cremation if you simplify the sale. In mortgage protection, you're there to cover the mortgage or the sale of the home. So simplify it in your mind and make it simpler on yourself, and you'll be able to sell more product. I promise you. A lot more product, in fact. A lot more. So, like I said, with final expense, if I'm thinking about final expense, I'm thinking about most of the time in the prospect's mind, they're thinking about covering a funeral or burial services. But I will add in the fact that if they have a mortgage, Mrs. Jones, what are you going to do if he, God forbid, we take care of the cremation or burial, but there's still a mortgage? So with final expense, I also train people to train their prospects on how to teach people how to cover the mortgage. And that turns into larger premiums. Again, I'm finding the need. I'm not doing what their need. Their need is more need than the actual need. So you got to teach people inside the house what's going on. Does anybody understand inflation too? I mean, for most retirees that are where I am, that just ride around in a golf court playing golf all damn day, this inflation thing might not affect them. But people that need to drive a vehicle, pay for food, get take care of family still, inflation can hurt them next. Let's take $1,000 in 10 years. $1,000 may be worth in 10 years and maybe worth 800, 900 bucks. So, you know, that's the deflation of money over the years. So we have to be careful on how to present this to and show them that inflation's about 4% a year, and bring that into your presentation and sale. All right, so let's see here. Any questions so far? All right, next. I think I'll go over an in-home presentation. Well, I am going over in-home presentation, but I do want to do the mortgage protection appointment setting. So you have Mrs. Jones. You call the lead up, you know, and you say, hello, Mrs. Jones is I'll just use this one. Is Marlene there? Hi, Marlene. My name's Jason. I'm calling on behalf of Nations Lending. You had requested information on mortgage protection. I'm the rep that handles that area, and I'm going to be in that area to get you this information tomorrow in between 1 or I have a 4 o'clock. I have a 1 and 4 o'clock. Do you have times on either one of those times? Yes, I choose 4 o'clock. Okay, great. Now, Mr. Jones is also available too. Why do I do that? You don't want to go to a home that has one individual, and that's called a one leg. You don't need to be in a home that has one individual at the home, because if you sell to Mrs. Jones only, she's definitely going to tell you, I need to talk to my husband about it. If you sell to Mr. Jones, he's going to say, I need to talk to Mrs. about it. So you need both of them there. Or, I'm not married. Okay, great. Guys, can somebody please mute out? Can you please mute your phones out or laptop, please? So at the end of this, I have where was I? Mr. and Mrs. Jones. You have the Mr. and Mrs. Jones. One, you have to, you know, if the significant other's not there, then you have to tell the other about the information. So long story short, make sure they're both there. Now, if somebody has you know, they're not married, they don't have a boyfriend, they don't have, you want to say, is there anybody that helps you make important decisions? And can they be there? If they say no to that, you just say, look, who's your beneficiary? And they're going to say somebody. Under the beneficiary law, just say, okay, let's have them there. Because you know, you can sell this to a single individual, but you know, it can be very difficult, because they can even say, I've been in homes where you say, hey, you know, I need to ask my son about this. He's the one in charge of my finances. I said, Mrs. Jones, you eat out weekly? Yeah, I do. What's your favorite restaurant? Oh, it's you know, I don't know. It's Red Lobster. Okay, you eat out there how many? 3 times a week? Yeah, sure. I eat about two times a week. Well, you don't ask permission to go eat out, right? No, but what I'm saying is you still spend money, but it's on things that you'll never get back. So this is here to protect your family. So you need to always have your objections in place, guys, and make sure that you're tightened up on that. You know, when people give you an objection, by the way, it's not even close to the real objection. It has nothing to do with what they're actually thinking in their head. What is it about? Okay, it's about change. If it's not about change, it's about the finances involved. So if it's about the money, just simply ask, what deters you from protecting your family again? And it's the language you use too. So if you say, you know, what deters you from protecting your family today? Is it the $30 a month you're going to spend to make sure your family's not left with debt? I can't get it through my head why individuals don't have this when if it was just viewed as a savings account for themselves that earns 3% interest, or you know, 7% interest on the money that the individual's putting into it, but it pays their family, you know, $10,000 to $100,000. But they're also, every single one of you, and all me included, spend money daily, weekly, monthly on BS that we just don't need. But we won't protect our families from the worst day of our demise. Why? Because you think you're going to live forever, I guess. I don't know what the case is. I don't surely think that. But after being in this industry for as long as I have, it really affects you, and you see some things that you wouldn't believe, you know. So you really do want to protect your family. Even you, as the sales rep, you need to get this stuff on yourself, have proof of it inside the house, be able to pull your app out, say whatever one you're selling, say, look, I have this too. It's a great product. That social proof is perfect for your sale. It works very well. So At the let's go into an in-home presentation real quickly, and then I'll call quits on this. Real quickly with this, you have the let's say you want to learn an IUL, just whole life, and term. So these are the three that you need to learn when you're selling, because it gives you all the options you need when you're in a home. You never know what the health status or age of the individual is. So many cases, this can be good if they can overfund it, because cost of insurance affects our IULs too. I'm always teaching people to take them out, but it also affects ours in the future also. So you have to make sure that you're able to coach people up on overfunding their policies. Whole life's real simple. They pay the same premium all the way through. And then term means what it means. It means terminate. So at the end of these, what choice and why did you make it is the question. Well, an IUL can be used for mainly the benefits of earning income for later, putting something away for their financial future later. This is great for kids and young people too. But the older people love it too, because it helps make up for the losses that they lost in 2008 in the market if they have money to put in towards this funding. So, you know, they're earning 7% interest on the cash. After they make their premium payment, everything else is just bonus money, earning interest. So this is great for kids in their future. So if there's any moms, dads out there looking for a way to help your children, you want to put them in an index universal life so they have something that can help them with retirement later on. Because Social Security may not be there for them. Hell, it might not be there for us. It may not have, may not have pensions anymore, as they losing the 401ks today. So how are people going to be able to retire? You have to self-fund. You better find a product for your own self and your kids before it's too late. The whole life product, just basically used for a simple 3% kickback on the cash value, pays death benefit. God forbid you die, got 12 months to live, it'll give you the money while you're still alive. Term's great for mortgage protection also, because it covers the length of the term 9 times out of 10, but only if it gives return of premium is it beneficial to the client. So all the money that they put in, they get back at the end of this thing. That's not a bad coverage, but here's the problem with that, is that they're going to be looking for coverage after this is over, unless they have some kind of whole life program in place right now. If they don't, one of the best strategies I know to do is for you to present term, cover the mortgage, and then also sell a whole life policy while you're in the house too. And this comes with some great living benefits too also. So it's great to sell these two together when you're selling term products. The IUL can be left alone because it basically covers what both of these cover in one. It just needs overfunded. So that's how you present this in the home, and that's why they're used. And get to learn these products and the carriers one at a time. Take one a week, take one a day. Call the carrier, for God's sakes, and learn the products, please. It helps big time. I mean, you could come to your upline, but I'm guarantee you that they don't know as much as the carrier does. So it's very, very, very good education whenever you're talking to the carrier. I want to show you some, here's an illustration of some cash value. This is only $108 a month, okay? And doesn't grow that large at 108 bucks a month, but hypothetically, if I were to teach this person overfund, in 10 years, there's like $6,000 built up into it. So if they double the amount that they were putting in, and just an extra 100 bucks would take that to 12,000. Next 10 years, they'd have about 24,000. So it shows you how the illustration gains momentum over the years. And, they could even have more to that due to the market going up too. So they never lose money in it though, which is a great part about it. You never lose a dime in this product. And that's the good side of that index universal life and its cash value portion. So inside the house, we walk to the door. We're finally to the door. We get in the door and we ask to sit over there. Mrs. Jones, take control, guys, of where you're seating yourself. If it's a square seat, I always teach sit here. Don't have these two across from each other. Have one here, okay? Check something out. Give me 1 second, guys. I gotta check something. All right, so anyway, if you have a circular table, again, don't have them across from each other. Have them here and here. That way your head's not twisting back and forth. It's important where you sit. Do not sit on lounge chairs, comfortable chairs. Try to get into a kitchen or dining room. Kitchen or dining room, okay? Now, when you're presenting this stuff, you want to show them the value, obviously. So Mr. and Mrs. Jones, how do I do that? First of all, I need to know what their situation is. Out of the two of you, who earns the two of the higher Social Securities, and what's the monthly mortgage too? Now, if it's mortgage protection, I want to know what the monthly mortgage is because I'm going to teach them how to find value in or equity. So if I take that number, it's a long equation, so I'm not going to do it right now, but I've done it in other videos. The monthly mortgage is $1,000. So what is Mr. Jones's? Mr. Jones, Mrs. Jones. Out of the two of you, who earns the two of the higher Social Security incomes? And the reason I asked that, I'm giving a reason. The reason I asked that is because that's what the other significant other is going to be left with. Mr. Jones, if yours is higher than Mrs. Jones, she's going to be left with yours. However, she's going to wait 6 to 12 months before she gets it. And in the years to come, it might be up to 2 years before people get this in play. So, Mr. Jones, is yours the higher of the two? Yes, it is. About what will you be leaving her? What will you be leaving her? See, I didn't ask what his Social Security income is. I asked how much he'll be leaving her, which is a different psyche in it. So I'm leaving her about $2,000 a month. Mrs. Jones, how much is yours? Mine is about it's $700 a month. So check this out. Already I know if the mortgage is $1,000, she has to live on $700 for 6 to 12 months time, maybe 2 years. She needs to get a void filler for that because his income's gone. Together they earn $2,700. Now, the other question, Mr. Jones, is there anything that you'll be leaving on top of this number? Like, are you going to be leaving her a pension or 401k? Yes, I have that also. Which one? I have a pension. Now, if he has a 401k or anything, 403b, things like that, then that's where we can talk the annuity talk. But that's how you get people to tell you what they have. And it helps you present more annuity opportunity. It's a very simple script, guys. It works in every single house. It blows every other script out of the water because it pulls people into a position to tell you what they have in place. And they do it. And now I'm in a position, if this is a 401k or 403b or some kind of stock-based IRA, it's very simply put out. Now I can show them an illustration for an annuity, and it works fantastically. So here we got $2,000 here. We need to fill that void. That's $2,400 a year that she needs at least, bottom line, for the first year. So we know we have to cover that. Plus, we're here for mortgage protection, so we also got to cover the mortgage costs too. So, you know, if this is just survival money or if this is blended in with the mortgage, I don't know yet. So anywhere, I always say anywhere between $25,000 and $50,000 helps individuals sell the house, or B, pay the back end of the house off. So that's how you do that and basically get this illustration. Out of the two of you, who earns the two of the higher Social Security incomes, and then that would be Mr. Jones. He's leaving her $2,000 a month. However, Mrs. Jones has to wait 6 to 12 months. That is how long people are waiting, by the way. She has to wait 6 to 12 months. Now, not everybody. Some people turn around a lot quicker, but it's about 6 months. But long story short, if she has to wait 12 months, she's out $2,000 living on $700 a month for 12 months of her life. And she can't survive automatically. The mortgage is already $1,000. She's $300 short. So there's the need. It's done. The sale must happen, or she does not survive. She will walk out that door. Okay? How much of the pension does she receive? 50%, 100%. 9 times out of 10, it's 50% because they're usually drawing 100% of it. The 401k, are you guys drawing from it? No, we don't touch it. Okay, great. Now I know that we can use that for an indexed annuity. look, if they, this is one of them scenarios that if they don't like the premium, hypothetically, let's say that they're age 65 and the premium's 100 or 200 bucks for 25,000, 200 bucks for this. You also have to build the value of these products before you show any numbers. So you want to show at this point the value behind the product. Comes with living benefits. It has it has cash value that earns at a high interest rate. So Mr. Jones, and at this point I would tell them, look, Mr. Jones, if God forbid something happens to Mrs. Jones and it's 15 years down the line, you're not only able to just walk away with the equity in the house, but you're able to guarantee that you have the cash value inside the product too. And you can stop the product. And maybe you got $15,000 in the product in 15 years. You can take that plus the equity in the house and go move into another home, downsize, or possibly stay in this house if you can afford it. So that's the basis of this. Now, if it's a 401k, 403b, or IRA, I'm going to say, hey, Mr. and Mrs. Jones, I want to make sure that you have all the information about this mortgage protection thing. There's one more thing that I need to give to you and present to you today, so you have all the information that's necessary to make your decision. So I have something I want to show you that has to deal with this, and I'd like to be able to show you. Can you guys have a computer or a printer? Yes, we do. Okay, may I use it? Does it have the printer have ink too? Ask them if it has ink, because 9 times out of 10 it does. Because when you're on the streets, you don't have a way to print something out. You need to be able to do it this way. So using their printer isn't out of character. Go ahead and do it. It's okay. So whenever you do an illustration, you need to say, look, their 401k has been up. You have to show value here too. When you're explaining a 401k, or I'm talking the finances involved in an annuity, you need to be able to show value here. So whenever you're doing this, you need to say, okay, I have a 401k. It's worth $250,000. Now, I can tell you, Mr. and Mrs. Jones, that this should be worth $500,000. And I can prove it to you. I can prove to you that this should be $500,000. Now, I know that I can show them a 10-year look back on the annuity product, which comes through the illustration, and it's going to tell me that it's going to be $500,000, maybe even $530,000 that they would have done if they were with this company for the past 10 years. So instead of being at their 250, if they were with this company for the past 10 years, they'd be at $500,000 now. Now, if they wait another 10 years, they'd be at $1.2 million. That's how the indexing annuity works. It doubles your money every 10 years, basically. And it's been doing that for over 30 years now. And people just, the higher interest earning ones, of course. But people just don't know about it, and they get stuck with their stockbrokers and the fees and things like that. So, inside your 401k, it's been doing this whole time, and you've been participating in these downsides, only hoping for the upside. So across the board, you've been basically earning 3%. That's been about what you earn. You earn 16% here, but you lose 10 here, So or you lose 20 here even. 2008, you might have lost 50%. I don't know, So this is a way to illustrate them. And then we can also teach them how to take an annuity product and say, how would you like to have your mortgage protection product free? You don't have to pay for it. So what we do is we teach our clients how to use the interest earned from this annually and pay for the mortgage protection policy. No out-of-pocket costs. Plus, you're doubling your money every 10 years. And at the end of this route, everybody's taken care of. My way is a better way than the system you're under right now. God forbid that the market tanks tomorrow in your 401k, you lose 50%. You're down to $125,000. You don't have enough life to get all that back. And you could participate in that. You could participate in that. I'm not saying it'll happen, but you could. And if it does happen, it's going to be a nightmare you don't want to wake up from. So here at the end of this story is that when you purchase the right amount of leads and you get the right amount of education and you do this system right, you make anywhere from $100,000 a year to $250,000 a year I don't even want to tell you what others are earning because they're well over $1 million. Some guys earn 1.5, some earn 2 million. There's guys out there earning $10 million a year. They've built agencies that are so substantial that their money is just it's outrageous. And you would be happy with this, I bet. So if you can work 30 to 40 hours a week from your home, purchase the leads, get the lead investment, and go out and see Mrs. Jones, sell final expense or mortgage protection. These are the numbers. This is about the average that we average and that most people that are high earning reps can average. So, but if you want to be at this number here, you definitely have to build organizations and you have to duplicate. You have to teach people. You have to do what I'm doing to get to these numbers. So this is just a little idea of the income possibilities if you do it right. I guess that's all I have for today. If there's any questions, please ask. Other than that, I don't have much else except for, Alyssa and her illustration, but I have to see if she's ready yet. I'm going to take a break here, guys, for a moment, and I have to make sure that everybody else is on this thing. So give me 1 second so I can check out some things here that people were texting me. Saturday morning at 10, we are made for phone and think contacting folks on home weekend is a bad idea. Thank you, Dan. All right, so anyway, any questions? Because without that, I mean, I can't really, I have no way to help you individuals who need help in there. I can put it to you this way. If you're not earning a 6-figure income or at $250,000 a year, and there's nothing that I don't run into that I don't know about this business. There's nothing I don't know. I've run into most scenarios. I've run into every single thing. I've run into a good 8 to 10 years worth of things that can definitely help you make more money though. Because that's what it takes is time. You put enough time into this business and you allow yourself you allow yourself daily to get educated on some piece of the puzzle that you're missing, whether it be product knowledge or the sales skills inside the house. You have to continuously find a way, search it out, pin it out, and get it into your head that whatever the mistake may be that you're making, there's an answer to it. Mrs. Jones gives you any objection. Mr. or Mrs. Jones are flying objections out to you. How many times have I sat with somebody where it's not over. It's not the real objection. I can just tell myself it's not the real objection. What is the real objection? The real objection usually comes down to finances or change. They don't trust, know, like, and trust you either. That doesn't help either. Bottom line is, if they don't trust you, that isn't going to happen. They met you just now. They know they filled this card out, and they're trusting the fact that you're the professional. So you have to act like a financial professional when you're inside the house. So make sure that you're acting like a financial professional in the house and do the numbers for them. Show them, look, if you have a mortgage, Mrs. Jones, and I multiply that by 12, that equals $12,000 a year that you're paying. Now, let's figure out your equity in 15 years. So if I take this $12,000 and I multiply that by 15 years, oh shit, I don't know what that is. Where's my phone? Is anybody good at numbers? So I got $12,000 times 15 years. Whoops. I'm sorry, $12,000 times 15 years. That's $180,000 that comes to, okay? Now that's not the equity, because that doesn't go all towards the amount that they earn. The equity is divide that number, the $180,000 divided by 2, and that'll give you your equity. Close to it anyway. So in 15 years, Mrs. Jones has about $90,000 in equity built up into her house. Now, due to good inflation, good market, she could have more. She could have $120,000 or so. So when you're selling mortgage protection, that's the number you're trying to protect from loss. See, the policy, don't get in your head that the policy is the beneficiary's way out. That's their way to wealth and riches. That's not true. This is, the house is. Get them to leave the $120,000 behind, and now you really took care of the beneficiary. That's how you help people really leave something substantial behind to their loved ones. Otherwise, they're screwed. I mean, they're just, you know, the significant other may want to live in the house. So sometimes you may want to figure out if you're trying to sell mortgage protection and you want to make it affordable, you have to show people this timeline. You say 15 years, and then 30 years, because most mortgages that people are taking out are 30 years long. So if Mr. Jones is like 60 years old and 15 years goes past, and he's 75 here, you know, 9 times out of 10, nothing's going to happen in this era of time, but it will happen in this era of time. So we know that the equity is $90,000. So what do they owe on the house? They owe about $100,000, right? Usually, if they're halfway through. So we got to cover them for $100,000, not $200,000. So it makes the premium cheaper. So it helps you make more sales this way too. And again, if you could find the annuity product, you can use the interest earned from the annuity to pay for this. Plus, they're doubling their money every 10 years. So it's just a fantastic strategy to selling a lot large premiums, big annuities, and multiples of them every year. And by the time you're done with the years, you'll have $300,000, $400,000, $500,000 years. When you're able to find annuities and be paid $50,000 a sale, $100,000 a sale, you can really bump your income up a year. But this is stuff done per sit. You know what I mean? That's not yearly, that's per sit. So if you, well, not per every sit, but per annuity sit or anywhere that you find money. How many times do you find money? Would be a good question to ask. Is you find it basically under the stipulations of 1 out of 10, you know, final expense leads, and you know, maybe 5 out of every 1 out of 5, maybe 1 out of 6 mortgage protection leads. So, all right. So, any questions beyond this? Can't believe there's no questions. If we had some questions I could answer, we could have a good time, you know, boom, boom, back and forth. We could learn a little something. We could educate others. So if you guys have questions, please open the mic up and ask. Let's get this ball rolling. So as you guys can see also, I have this webinar thing going on here too. That's that we're training people on also. So we got the live Facebook feed and we got the live webinar. So if we could, let's just ask some questions. Does anybody on Facebook have any questions? Any life reps that have any questions? Okay. No questions? So everybody's going to go out and make $20,000 next week, right? I'm trying to find the comment section here. Okay, I'm sorry that there's no questions. I guess that's it. If we don't have any questions, guys, I'm going to end this here, and try to pop Alyssa back on for that illustration time. I'm going to see, actually, maybe she's ready right now. If you want to learn how to do illustrations for Index Universal Lives, you guys can stay on, and I can get you taught up on the illustrations. I'm going to see if she's ready to go yet, so I'm going to need a moment of time just before that starts. So give me a second, and I'll find out if she's ready.